Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Robinhood. So Robinhood just reported their Q2 results. We're going to talk about how Robinhood performed. We're going to talk about its path to profitability, and then we're going to bring this all together and talk about its valuation. So we're just going to jump right in. So Q2 results came out and the revenue was up 131% year over year. Okay, so that's quite a strong growth rate, but if you put it in context of where the company has come from, the company has been growing at substantially more than that. Just for reference, if we look back year over year, 2020 over 2019, revenues were up more than 150%. So there is a marked deceleration right here going into Q2. Now, for complicating things is that management talked about Q3 being slightly weaker again. So, it's difficult to get a real good sense of what its growth rates could be, but we'll come further into this in a minute. So here's the thing, right? So the way it works is that customers open an account, they put cash on the account, and that's a very strong cash infusion. You can see here, I'm not sure if you can see on the screen, on the red arrow, you see payables to users was up 1.9 billion. So that's a very strong cash infusion. So even though the company on a net income basis is substantially unprofitable, they had this very strong cash infusion that really helps sustain the business model going forward. So, it's kind of difficult to get a good sense of if in the event that there was going to be a slowdown in users, can the business, actually the underlying business without that cash infusion, be sustainably profitable? Especially when you add back all that stuff like the stock-based compensation. They just got so much stock. They got approximately 2 billion coming in over the next 2 years of stock-based compensation. So that's so a really punchy amount of stock-based comp coming out. So all considered, I'm not sure. I know that it's kind of bad taste when a company is recently IPO to talk about a path to profitability, but it's still lingering forward. After all, the stock is down 10% after hours. So if we don't address this, it's an important thing to talk about. Now here's some positive news. Okay, so you can see that the net cumulative funded accounts continue to go up over time. That's really, really great. So despite all the negative headline press that Robinhood may not have the interest of the customer at hand, and that they're directing the customers' orders towards the market makers that pay them, and that Robinhood may not be getting the best price for its customers, that hasn't stopped a large influx of users coming on to use Robinhood. In fact, the monthly active users were up substantially, and you could say that sequentially it was up 20% from Q1. You could say that it's not as strong as the gap that you see here from Q4 to Q1, where it's up more than 50%, but for all intents and purposes we are still going up and to the right. So it is hasn't stopped customers from really jumping on board and getting involved with Robinhood. Now here's the problem, right? The bulk of its revenues right now are coming from cryptocurrencies, but more specifically you can see here, so on the red arrow you can see that the amount of revenue from equities was actually down year over year. So despite it being a booming market, equities were actually down. Revenue from equities were actually down year over year. What really helped them was cryptocurrencies. You can see cryptocurrencies were up more than 4,200%. So crypto is just huge for them. But actually, even more interesting is that 62% of their cryptocurrency revenue comes from Dogecoin. So the prospects of the shareholder in Robinhood, not the investor, but the shareholder of Robinhood is really contingent on Dogecoin continuing to be the flavor of the month amongst investors or traders or speculators, whatever you want to call them. It's a lot of risk to take on. If in the event, as you can see in the last several months, Dogecoin continues to decelerate in its capital appreciation, that will impact. It's not could. It will definitely impact how Robinhood does. Now, here's the thing, right? So The stock, it's difficult on the one hand to say realistically what's this company's growth rate going to be like sustainably going over the next 12 months. So that's one question mark. The second question mark is the stock at the moment is kind of priced at approximately 19 times forward sales. Even if you take into consideration the sell-off after hours at 10%, it's still priced at more than 18 times forward sales. So it's an expensive stock. There's question marks about its revenue growth rates, and then there's a huge risk that the bulk of its revenue is contingent on Dogecoin. So it's a lot of risk right here, and I'm not seeing enough upside to compel me to take an opportunity here. If you want to know what kind of stocks I'm interested in, check out Deep Value Returns on Seeking Alpha, and you'll find out the source of ideas. And I'm not going to replace you with your source of ideas. You have your own portfolio, but sometimes you might have the time or inclination or willingness to do the due diligence on certain stocks. So you check out my platform and you say, okay, come up with a source of ideas and find one or two picks that resonate with me every so often. And we have a growing investment community that chats in the chat board, and we bounce ideas off each other. So I hope you come and check it out, and you're welcome to do a totally free trial to see if it suits you. And you can come in and you can kick the tires, and you can cancel anytime before the 14 days, and you're not going to be charged anything. But if you like it, of course, stick around and get to know each other. Okay, see you soon.